Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, another kind of quiet day. We did see the Nasdaq recovering again today, which is good. That has had a lot of relative weakness over the last sessions, or I should say last couple of sessions. But here we have the final tally card here. Dow down about 55 points. S&P's off about 3.5. Nasdaq's up almost 19, and the Russell flat on the day. Crude hanging out flat too as well. Bonds catching just the slightest bit of a bid here, and the gold just hanging out near these 1220s. And again, we'll see all of this on the charts and what they mean. But as always, we're going to start off with the S&P 500 dailies. So folks, just focusing in on the S&P 500 dailies. One of the things that I've just been mentioning here is I think what the market really needs to do, and what I think would be best for a lot of the chart patterns that I'm watching out there, is for it to just go sideways right at these prior resistance areas. Again, I think that some of the areas that we broke out of earlier last week, the descending trend line, the 2150s, these are all positive developments. But with the way that a lot of stocks have broken out here, a lot of them are extended. So I'm not finding a whole lot of ideas when I run my stock screens. And I think that just points to the fact that a lot of stocks are extended. They need a few days, maybe even a couple of weeks, to form new bases, new setups, new entries before continuing any sort of move higher. So as long as we kind of hang out below these 2180s here on the S&Ps, if we back and fill in here, I think that would be actually ultimately a positive thing to let stocks digest the gains, set up some proper bases before maybe trying to make an attempt up at all-time highs in the 2200 whole number on the S&Ps. We've been mentioning the Nasdaq, a little bit of relative weakness here. We did see the Nasdaq starting to try and get an attempt up and over this descending trend line. I think we got to get up and over the 5300s on the Nasdaq Composite. We're about 5 points shy on that. We did see, however, that the relative strength just starting to recover just a little bit. Let's keep an eye on that. Typically, it's a little weird or a little odd to see any sort of rally in the market without the Nasdaq leading it. So maybe we had just a little bit of rotation here over the last week, some rebalancing on major portfolios. But other than that here, let's see if these big cap leaders can take the reins, so to speak, and continue to run with it. We're talking about like the Facebook, the Apple, the Amazons, the Googles of the world. They did experience a bit of a sell-off as there was a rotation into infrastructure plays. But for right now here, we do see the Nasdaq catching a little bit of a bid. But the real strength here definitely is coming from the Russell. Look at the Russell here just posting right off the bottom from the 1150s, just ripping all the way up to the 1300s. Just putting in just some sideways action. And this is something that you'll see across the board with a lot of leading stocks. So the financials that broke out, the insurance companies, the infrastructure plays, they've all just ripped ever since the election results. And now they're just putting in a couple of days sideways action. And I think it would be nice for the Russell to kind of just hang out right near these 1300 whole numbers. Huge amounts of relative strength coming in here as well. So small caps definitely catching the lion's share of the bid that's coming in post-election here. Also the Dow Jones catching a nice rip higher up into almost the 19,000s here. And you can see what you should be looking for in terms of stock chart patterns here. Russell, the Dow, and to a certain extent the S&Ps are all forming what we would refer to as a high handle. Some would call it like a bull flag. But essentially what it is a strong run up and then very tight price action. And so what that's going to do is a lot of stocks that have broken out from, say, double bottoms or cup and handles over the last week, they'll have this strong run up, but now we're looking for the sideways action to continue a basing pattern and then to basically buy it if it starts to break out on heavy volume at that point in time. As we take a look across all the major external markets here, taking a look at the crude. So the crude had a strong rip up to the 43s, now balancing out right near these 46s, which are prior highs. So again, we were talking about 43s as a potential area of support. We did actually find that support, but not after it actually had to go and run some stops to the bottom. So it blew out some stops underneath the 43s before rejecting higher, basically kind of like a false breakdown. And so far, hanging out right near these 45, 46s here. I think if you settle out here for a couple more days and maybe attempt to break out above 46s, you could have a little price recovery here in the crude. The bonds here continuing to hang out near lows. Okay, so that means that the 10-year yields are hanging out near highs. Essentially, the markets are pricing in a rate hike at this point. If you take a look at the 10-year yields, the TNXs, right, just ripping higher, gapping up, trading up near the 2.2% level on the 10-year notes. And then finally here, taking a look at the gold, the GCs. Folks, the fact that you're just hanging down on these lows after a major rejection after an attempted move higher, rejection down below some previous support levels, the 1310s and the 1250s, hanging out near the 1220s here. If you start to break down from this price balance, I'm kind of looking at the 1200s as a potential area that the gold might be headed down to. Again, that's only if we break down below the 1220s in this balance that we've been forming. So just watch that across all fronts. And then finally, as we move over to the equity side of things, a couple of stocks from our daily stock picks that worked out really nicely today. One of them was Nvidia, really nice rip higher. In essence here, this is what we're looking for, is a little bit of those high handle setups. You can see it a little bit more clearly on the 60-minute chart. And today here, the way the setup worked is, it kind of just ripped right out of the gate. But look what it set up on the 5-minute chart. Just a nice little entry right over here. Boom, just ripping higher. Nice trade on the Nvidia. That was about like a 2-3 point rip higher. That was on our watch list early this morning. That was a nice trade setup, folks. And as we watch some of these leading stocks here, again, a lot of the strength is coming from the financials, and this is what we've been meaning about the high handles or the high tight flags or bull flags here. If you can just go sideways for a few more days, a lot of the names in the XLF, say like the JPs, the Bank of Americas, these are all near 5-year highs or all-time highs. Even some of these super regional banks or whatnot, they're all going to be forming these high handles, and that's what you're going to be looking for potential entries. Remember, just because something's moving up, we don't chase it, right? We have to wait for proper entries, and that's high relative strength stocks breaking out on volume from recognizable chart patterns. And here what I'm seeing is, if this goes sideways for a few more days, you may have a whole slew of potential high handles coming out of the financial sector. I'm also watching a lot of the infrastructure plays here. Same deal, right? Big rip higher, now potentially high handle entries that these stocks may be providing, with steel stocks too, right? Big rip up, maybe a few more days and you'll get those high handles. So at this point, really, folks, I think the game plan is just watching and waiting for any trade setups to come to us. It's not to say that there aren't things that are moving, as we saw with like the Nvidia and some of the biotech stocks. We are taking some good trades that are working, that are profitable, but I think the vast majority of the trades that we're going to be taking here in the future are predicated on a lot of these handles forming on the high handle portion, and then we're just going to be waiting there ready for this to break out on volume. So be prepared for that. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.